in just over 2 years, we've gone from, about 800,000 feet of subleasing to 4.6 million and 77% above 100, which we didn't need because we already had a lot of inventory in that 100 to 200 range. Right. So now you throw on subleasing and discounting. It's problematic. Right. For that size range. Although we've talked about this in the last podcast, that size range has improved. This isn't helping.
Welcome to our Industrial Advisors podcast. Bill Condon and Matt McGregor doing a 5-minute Friday today.
Happy Friday.
Yep, happy Friday. Today's topic is subleases in the Puget Sound market.
It's a problem.
We've definitely seen an uptick in subleases, and a lot of people are asking about like what is the state of the sublease market. So let's talk about it. We ran an analysis above 50,000 square feet. The amount of subleases. There are 26 subleases currently available on the market that are above 50,000 square feet. And of those 26, above 50,000 feet, 19 of them are above 100.
77%.
Yeah.
Yeah, it's problematic. We've gone in just over 2 years, we've gone from, about 800,000 feet of subleasing to 4.6 million and 77% above 100, which we didn't need because we already had a lot of inventory in that 100 to 200 range. Right. So now you throw on subleasing and discounting. It's problematic. Right. For that size range. Although we've talked about this in the last podcast, that size range has improved. This isn't helping.
Yeah, that's right. So let's talk about how subleases actually impact the market, right?
Yeah.
It certainly helps those tenants that are out there looking for short-term deals, right? Because
if there are any.
If there are, but it provides a solution for those tenants, obviously.
Yes.
But it certainly impacts the overall market because, the vacancy's up across the board, and when you're competing with subleases, and a sublease is willing to do 80 cents on the dollar, if you want to go do a deal with a particular group, you may not have to get to that certain level, that level, but you are going to have to sharpen your pencil some.
The rule has always been, if you're subleasing space, we always say this to clients, you're typically going to give up about 30%.
Yeah. If you have a sublease that you're bringing out.
Yes.
Yeah.
So you're gonna lose 30% between downtime, free rent, reduced rate. You're gonna lose 30%. I think that is greater now than it ever has been.
Yeah.
It may be exceeding 50% or more.
Yeah.
Right. Because the problem is, who took sublease space before? 3PLs.
Yeah.
Right. So 3PLs are the one giving the space.
Yes.
So not only do you have the problem of they're not out there, they're the ones giving it.
Yeah.
Right. For the most part, that's a major problem because you don't have a demand. So now you're having rate erosion against, long-term direct deals.
Yes.
Right. And so it's kind of a double problem. And that 3PLs are retracting the space and giving it up. And so there's no demand because those are the guys that valued the subleases.
Yeah. The other challenge is too, in the past, we didn't have 26 subleases out there, right? So the volume's up.
Most of our career.
So not only are you not just competing with direct deals, but those subleases that are out there competing with each other and chasing each other down from a rate standpoint.
That's right.
You also have some really good buildings that are available for sublease that have long-term commitments on it. So if you're a big tenant that wants a really, a 500,000 square foot building that is functional, you actually have an option in the subleasing market where you can go pay 80 cents on the dollar right now.
Yeah. I mean, the Nordstrom's deal is a perfect example of that.
Yeah.
That's typically not your sublease, right?
Yes.
You're not typically getting a state-of-the-art brand new building, brand new office, dock leveler, seals, pads, everything, right?
I mean, IKEA,
charging station, everything, right?
Yeah. So
quality spaces.
Yeah. So you have that. So the answer is the sublease market is definitely impacting the overall market
especially the 100 plus.
100 plus big time. And so there's just a lot of options out there for those tenants. And so it's had a big impact. We're hopeful that with some, increased activity in the tenant market, that some of this some of this product will go away, but there certainly is a lot of product out there right now for sublease. So we're going to keep a close eye on it.
Yeah, and I think the resolve is going to be the 3PLs getting demand back. So I think this is going to be, a couple of years of slugging this out until the 3PLs get back to a good market.
Yeah, and that's a good point, because once those 3PLs do start to pick up again, they may not go lease space, but they may just take back their sublease, and so those will go away. Take
their sublease, take other people's subleases, but that's where the demand has to be driven.
Yeah, totally agree. So we'll keep a close eye on the state of the subleasing market, and that's the current state of it. Have a good Friday.
Happy Friday.